Boris' bounce for UK equities shows no sign of slowing down. Brexit uncertainty has plagued investors in UK assets for more than 3 years as global allocators shied away from the region, but the outcome of December's general election and a clearer direction for Blighty under a Conservative government looks set to buck the trend. It's not just Brexit that has clouded investors' perspective of the UK during the past year. The high-profile closure of Neil Woodford's investment management business, led by the collapse of his UK equity income fund in June 2019, gave investors even more reason to shun domestic stocks. But a torrid year for the asset class ended on a high as Boris Johnson, pictured, and the Conservative Party's victory at the polls on the 12th of December gave UK assets a much-needed boost as the threat from nationalisation of certain services and sectors posed by a Jeremy Corbyn-led Labour government faded away. Pent-up demand for UK equities. According to data from global funds transaction network Calastone, domestic investors ploughed a net £1 billion into UK equity funds in December, the largest ever monthly inflow of capital and almost double the previous high set in July 2015. Calastone says there is no doubt the UK election was the main driver as flows escalated strongly as soon as the election was called and strengthened as polls indicated a likely majority for the Conservatives. Head of Global Markets Edward Glyn believes a clearer path for the country is unleashing enormous pent-up demand for UK equities. It is not all about Brexit, however, he says. Labour's historic defeat had a positive impact on investor appetite for UK assets, and on valuations, as it removed the prospect of a wide-ranging left-wing programme that investors judged negative for asset values. But it seems the shift to UK assets was in train before the 12th of December poll results rolled in. The latest Investment Association statistics for November show UK equity funds, including UK all companies, UK equity income and UK smaller companies sectors, had their best month of net retail sales since May 2019, with £108 million of inflows. This is in stark contrast to September 2019, when investors pulled a net £676 million from UK equity funds, and in Q3 2019 overall, when £2.3 billion was withdrawn. According to Fund Invest data, since the election on the 12th of December, the FTSE 100 is up by 4.25% and the FTSE All-Share has gained 4.3%. Overall during 2019, the FTSE 100 returned 17.3% and the All-Share yielded 19.2%. Since the Brexit vote on the 23rd of June 2016, the FTSE 100 has delivered 38% while the All-Share has returned 38.2% in sterling terms. However, this return trails the 49.5% for the Stocks Europe 600, 63.8% for the MSCI Emerging Markets Index and 82.8% for the S&P 500. The FTSE 100 return, although lower than other markets, is not a surprise, given that some 70% of the index is exposed to companies with rev. For more on this story, visit the news article link.